Heidi, hi everyone, and welcome aboard. Thank you for joining me for another Sunday market update, where I will attempt to show you what my thoughts are for the upcoming week, and maybe even a little bit beyond the week, or maybe inside the week. A lot will depend on what the heck is going on with Mr. Donald Trump and the Straits of Hormuz and all those sorts of things that are going on every second of the day, and where it just changes minute by minute. I think on Friday when I went to sleep, we were looking okay. The peace talks were holding, blah 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 blah. And when I wake up this morning, it's all changed. Straits closed, firing rockets. Goodness gracious. Anyway, trying to make sense of all that is not my job, but it is certainly part of what I need to take into consideration as we go into the new week. So I'm going to approach that as such. Let me see if I can bring up the right screen here and hopefully share my thoughts. If somebody could tell me, if I open the chat box, somebody could tell me if I am showing my Aussie Kiwi weekly chart. That would be good. If somebody could tell me that, fantastic. Yep, yep, yep. Thank you all. Thank you, Sam. Righto. The reason I've gone to Aussie Kiwi on the weekly is that I have four currency pairs that come under my attention due to the fact that they are showing what I call game changer bars. Um, this one is not in concert with changing the game, however, as you might see very clearly from the chart. Game changers for me are, just briefly, those of you who aren't aware of how I trade and what my candle patterns do and talk to me. Game changer bars are bars whose, in this case, if it's a buyer bar, whose low is lower than the previous, but closes on or near its high. Low lower than the previous, closes on or near its high, which is clearly in that criteria. The problem I have with this one, oh, you're not seeing my, oh, of course you're not seeing it. I better put a pen on the chart. If I can do so, laser pointer will do. Is that better, guys? So the low is lower than the previous bar and it closes on or near its high. At the beginning of the week, I use a weekly chart, surprisingly, not. So in this case, the Aussie Kiwi on the weekly chart is showing me a bar whose low is lower than the previous and whose high is on or near its close. That is the criteria I use to filter my watch list for the upcoming week. This one, however, is in a very, very strong uptrend, almost parabolic uptrend. And for that reason, I'm hesitating to put my entry above that bar with my stop loss below it. And the reason for that is I'm looking for a pullback at all times. So I'm looking for some sort of cycle like this to occur before I go. See, this one here is perfect. Lower than the previous, on or near its high, but 1, 2, 3 weeks of retracement before it went. This one, 2 weeks of retracement before it went. Exactly the same game changer bar. Hasn't gone too far this time before it's pulled back in a one candle, but it hasn't given me a decent retracement, so I can just jump straight back in there. So I'm going to eliminate that. I'm spending a little bit of time on this because I'm giving you an explanation as to how I'm looking and what I'm looking for. So the next one, if I can actually get there, get rid of my laser. There we go. Is the monthly chart. Now, when I look at the monthly chart, I can foresee that Aussie Kiwi goes into this zone here. So it does have some room to move yet higher, in my humble opinion. Massive breakout. And you don't often see Aussie Kiwi up in this area. Aussie Kiwi for the last, what, 12 years, 13 years, has tended to stay in that range. So this is a massive breakout for Aussie Kiwi. And the last, what, 1, 2, 3, 4, 5, 6 weeks has seen this, or months rather, has seen this take off. So I'm certainly not saying that can't happen, and there is room there for a little bit of profit to be taken, but I want to see a pullback first. So let's move on to the second of my watch list. And this one is Euro Yen. Euro Yen, but this time short because we've got a high that's higher than the previous, and this is closed on or near its low. Now, this one is quite different to Aussie versus the Kiwi because Aussie versus the Kiwi is telling us to go long. Euro versus the yen on the weekly chart, however, is telling us to go short. So I want to trade a game changer bar short. Have I got the kahunas to do that in a trend that is very, very strong and very, very clear to the upside? A little bit of a hint here that it's slowing down, no question, and a big bearish engulfing bar there, but we did put in a new high after that bearish engulfing bar. So it's a little bit on the too early stage for me. I'd rather see this put in a lower high at least, and maybe even a lower low before I wanted to trade it short. So I'm going to actually say no to that one as well. And once again, I need to get my arrow back. I don't know why this does this to me. There we go. And have a look at the monthly chart. I have nothing above here. So there's no resistance at all. Couldn't find anything over here in recent times. So this could conceivably go long. So I don't want to be trading it short with no resistance above me at all. So I'll eliminate euro versus the yen. Now to the ones that I'm interested in. I am interested in euro versus the CAD. And I've drawn up this chart to show you what I'm seeing. Yes, there is an uptrend, no question, but there is certainly the hint of reversal coming. Now, depending on your explanation or description of a double top, that's precisely what I see here. Now, double tops out of textbooks are equal highs. To me, that is a top, and so is that. They're very close together, therefore I call it a double top. Now, you can argue till the cows come home whether that's right, wrong, or indifferent, but that's my interpretation. So what we've had after that double top is a lower low and a lower high. Potential lower high, I would hasten to add at this point in time because we've only got one candle that suggests that this will be a high at this point. However, it is a game changer bar. Game changer bar, remember, is a high who's higher than the previous, closed on or near its low, suggesting that we trade this short. A little bit of a complication with this one, in that that is a clear slingshot, which is my go-to trading strategy, set up for a buy. Let me go to the monthly chart on this one to see if I can find a reason. Once again, I can't get my pointer back. This is really frustrating. Still haven't got it, but we have gone to the monthly. Beautiful. On Euro Yen, we wanted to go forward, not back. Oh dear, please do something to help me. I can't change from this highlighter, guys. That's what's holding me back here. And I haven't got a touch screen either. How do I fix this? No, I've lost everything. Aha, we're back. Righto. So EuroCAD weekly, go to the monthly on EuroCAD to give me an overall picture, give me an idea of what I'm up against in terms of long term. So what I see here is this key level, which has been rejected here, rejected here, rejected here, rejected here, and now what appears to be a fake out of that level. But is it? And that's the question that I have to ask myself. We're back inside that zone, in my humble opinion, which is why I've highlighted that as white on the screen. The real problem I have with this, as far as an indicator is concerned, is this bar here. This bar here is telling me that price tried very hard to go back down, but failed dismally. Then the following bar, which is last week's or last month's, or the current month's bar rather, is showing me that it wants to try again. The issue, of course, as I mentioned at the top of the show, is that we have Donald Trump, Strait of Hormuz, oil prices, which are very CAD centric, or CAD is very much reliant on what oil does. So Straits closed again. We've had an easing of oil prices over the last week or so. Is or are we expecting tomorrow that the oil price is going to go up again? I think in my mind, I'm saying yes, that's probably going to be the case. So if that's right, and this candle is right, oh, this is the monthly, sorry, I'll go to the well, back to the weekly shortly, but it's suggesting to me that downside for Euro CAD is definitely on the cards. So I'm agreeing with the weekly candle on Euro versus the CAD. I'll come back to that shortly. Pound CAD is the fourth and final currency pair that comes up on my watch list this week as far as game changer bars are concerned. And this one, very similar to Euro versus the CAD, has a high higher than the previous and closed on or near its low, suggesting to me that there's going to be downside. Adding to that, I've got what I call the three amigos sitting here. Now, the three amigos um, are virtually false breakouts of a range. Now, if you consider that the range is in here, right through there, can I draw that? Probably can. Pen. Okay. You can see I'm so technically adept here. The pen won't go across for some reason. Let me try again. Okay. It's not going to let me do it. So we'll just go back there again. Imagine, guys, that I'm drawing a line across here and down here. That's as I see it, the range. Let me try that again. So the range here has been false broken here, here, and here. The key to the three amigos is that they continually go higher. So higher high, higher high, but still a fake out of the range, fake out of the range, fake out of the range. Now I'm seeing a lower low and a lower high, another lower low, potentially another lower high. So this has got potential change written all over it. And that's why, from a technical perspective, I certainly have to favour pound CAD over euro CAD on the weekly basis. If I now go to the monthly chart on pound CAD, which we've tried to do two or three times due to this technical inability that I have inherent in my repertoire, you can see that we are bouncing off a key level. Everything this week is so, yes, looks good on that chart, not so great on that chart. So the monthly, although I can clearly see the three amigos sitting here, I can also see potential head, left shoulder, right shoulder, false break of that range, and now a lower high, and as I said before, lower low, lower high, potential for this to reverse. So that's still there. There's also room to come back to this key level, in my humble opinion. And that's another trait of pound versus the CAD, as opposed to euro versus the CAD, that makes me feel a little bit more comfortable with pound versus the CAD. So what I would then do is have a look and see, well, which is the stronger, the pound or the euro, because I want to trade one of them short against the Canadian dollar. So let me just go through this exercise. And what I did was go back for the previous, what is now 4 weeks, not quite 4 weeks. Sorry, not quite 8 weeks, where we've got February 28th was the beginning of the current conflict between Iran and the United States. Throw in Israel, throw in Lebanon, whatever you want to do. But this is how pound versus the CAD has traded in that period. So I'll call it the war zone, if you like. So pound versus the CAD has traded from February 28th to April 17th in a positive fashion of 1.25%. Not great, but it's there. Somewhat interestingly, I would have expected that to be probably a little bit stronger, given that we've got a war situation. But then you throw in the oil situation where oil's gone from 60 something dollars to $120 and now back again. I would have expected the Canadian dollar to have performed a little bit better than it has, certainly in that initial thrust of the oil situation, given that Canada doesn't rely on oil, but it's very much a factor in their currency value. Euro CAD similar, but it's only rallied 0.56% against the Canadian dollar. So therefore, I'm suggesting that the pound versus the CAD has gone better than the euro versus. Well, I'm not suggesting, that's what the figures are telling me. Now these prices here are not 100% agreeing with my MetaTrader 4 because they've been extracted from a multiple range of providers, price providers. So if you're looking at a chart and saying, well, 1.8404 and 1.8634 aren't what I'm seeing on my M24, they're pretty much in the ballpark. So these numbers here are pretty accurate. What do I conclude from that, if anything? Well, I would like to suggest that the pound is outperforming the euro, and therefore euro short versus the CAD and pound short versus the CAD doesn't quite aim up from what I said before. I preferred the I preferred the pound over the euro short versus the CAD. So I'm getting conflicting messages here. The charts are telling me one thing, price is telling me another, and the comparative is drawing me back towards pound versus the CAD. The chart is saying pound versus the CAD. The stats are saying euro versus the CAD short. So then we have to make a decision. So let's go back to the pound versus the CAD. I really like this chart. This chart suits me down to the ground. Three amigos sitting here, lower low, lower high, lower low, lower high, game changer bar. I feel very comfortable in shorting pound versus the CAD tomorrow morning. The one thing that's probably going to stand in my way, if the Strait of Hormuz is actually closed, as we are led to believe it is currently, um, this may gap down and I may miss my entry. So I've got to be up early in the morning and watch the charts to see if I can actually get in here at the right level. I want to get in below that bar by 3 or 4 pips. And I want my stop loss not to be above the bar, but probably above this swing here, because that's the first of the lower highs. So I want to be in there and I want to put my stop loss up here. Now, this is really dependent on what the chart tells me in the morning when we open. The twist I'm going to give you now is I'm going to split my risk between both pairs. I'm going to split my risk between pound CAD and euro CAD, doing exactly the same thing. I'm going to enter below last week's bar. This is on a weekly chart, guys. I'm trading on a weekly. I'm going to put my entry below here. I'm going to put my stop loss, probably because there's not much difference, I'm going to put my stop loss a fair bit above the actual high or the higher high. And trade euro CAD. I'll probably weight this in favor of pound CAD because I like the chart better. So I'll be going pound CAD probably 2/3 of 1%, euro CAD 1/3 of 1% to trade this short, trade both of them short. Now, speaking about the war, here's something that goes through my head. Coming into the war, we had a set of circumstances price-wise on charts that would suggest one thing, and going into the war and during the war, the charts should be telling me something completely different, or are they? So I asked the charts this because I want to look at what happens when the war is over, basically. So my theory being, if there was a set of circumstance going into the war on, let's say, euro dollar, and that changed throughout the war, then when the war is over, I would expect to go back to where we were. So in other words, let's say, well, let's use the figures. I I prepared this chart and I've called it the big players because I think these are well, certainly not all, but a bunch of the majorly affected pairs given we're going into war. So what I did was, well, what happened to these pairs during the war, which is still going? And I found that, not surprisingly, oil rallied 26%. That's to current. It did a lot better than that, obviously, but it's now pulled back. So I'm going up to the current um, data that we have. So I'm going to eliminate that and look at these figures. So dollar yen went up 1.7. They're not a massive change, are they? Outliers, potentially gold and silver, silver in particular, which, yes, went through a big rally prior to the war, but has come back substantially. That looks in graphic form very, very clear. So there's only really two or three, if I include oil, two that did well, or euro dollar held its ground. Dollar yen went up a little bit, but gold and silver certainly didn't. Where does that lead me? It leads me to go, well, okay, if we come out of war, then perhaps this should reverse. So oil comes down, gold goes up, silver goes up. That's what's in my head, right? And this is where I'm going to create a watch list based on these numbers and these charts, or these tables rather. Then I thought, okay, let's go and see the currencies. I'm using the risk on, risk off currencies here. So Aussie is generally considered to be a risk on currency, yen considered to be a risk off currency. Same with CAD, same with the Kiwi, because they're commodity currencies as well. You would imagine during times of war that commodities aren't going to do too badly. So it's a bit of a mishmash here. But and that's why we're seeing things like Aussie yen in a completely risk-off environment, one would imagine, has actually rallied during the war, as has CAD yen. Kiwi yen barely, but certainly positive. Then I look at, okay, Aussie's doing far better than the Kiwi, so therefore I'm seeing that result. And from this chart, you can clearly see that the Aussie is outperforming the CAD and certainly outperforming the Kiwi. Take that into mind as we come out of the war. Does that reverse? Does it continue? I would suggest that we need to think about that a little bit harder than we are right now, but it's suggesting to me that when the war is over, we should be looking at things like this and going, okay, well, here's what happened during the war. Is it going to come back to where it was post-war? There's the dramatic chart, or yeah, called a chart of exactly how that's panned out. So you can see Aussie yen, somewhat surprisingly to me, outperformed, and certainly the Kiwi versus the yen and the Kiwi versus the CAD and the Kiwi versus the Aussie and the Kiwi versus the Aussie. Kiwi has by far and away been the worst affected currency. Then I asked myself, okay, if the yen is not performing as a risk off currency, is the Swissy performing as a risk off currency in terms of these commodities, Aussie, CAD, and Kiwi? And I found pretty much exactly the same result. So the Aussie and the CAD performing okay, Kiwi not so much. Where does that leave us? I'm going to skip that one because it's just showing exactly the same thing. Where that leaves us is, well, let's go back and compare. Before the war, so pre-war, Aussie yen was up 5.74%, and during the war, up 3.98%. That's the difference here to here, not here to here. So war versus previous, there was a 1.76% decline, if you like, in Aussie versus the yen. So that does mean that there was an effect from a risk off point of view. That adds another level of thought to me, and I go, well, okay, it's actually dropped. So Aussie yen has dropped because of the war. Aussie Kiwi has rallied because of the war. CAD yen has done the same thing. It's actually rallied during the war. I would suggest to you that's got a lot to do with the oil price, right? In fact, I'm not suggesting it, I'm saying it to you. That's got a lot to do with the oil price. Aussie Swissy has declined. I know that says positive, but we're going from here to here, not here to here. So it's actually declined during the war, as you would expect. So risk off. Pound CAD, we'll forget those because I don't know why I've added those there, but these are the ones I was concentrating on. What can I conclude from this, if anything? Well, I'm concluding that Aussie yen, although the previous set of numbers suggested that it's doing well during the war, as it is, but it's actually declined. I would like you guys to take this away with you. Although the Aussie yen is doing well versus the war, in during the war, and I've suggested that maybe that changes when the war ends, go back and have a look at this. What was happening before the war versus what's happening during the war. And Aussie yen has declined, gone from 5.74% positive to 3.98% positive. So where the raw data during the war suggested that the Aussie yen is doing well, it's actually not comparatively to the beginning of the year up to now. Room for thought, one would suggest. So whereas early in the day, when I was doing these numbers, I thought, okay, as soon as we come out of the war, I'm going to go Aussie yen short because it's doing well during the war. It ain't doing that well. It's actually going backwards versus the yen from beginning of the year to when the war is over. I hope that's kind of helped rather than complicated the issue for you, but that's kind of where I'm at. I want to know what's going to happen and you can go through this exercise with any pair, any commodity, anything, any asset. I think that's a wise idea because leading into the war, during the war, is showing you a clear differential, if you like, as to what has happened to those pairs in that period of time. So that's where I'm going to leave you, folks. It was more a provocation than an actual um, well outcome, I suppose. But watch pound CAD, watch euro CAD tomorrow, and if those gaps don't appear to be too large, then I would suggest that downside on both of those might be a consideration for the upcoming week, which I hope is great for you. So thank you for the thank yous, guys. I look forward to catching up with you next time I do Sunday Market Update. In the meantime, those of you going to Bali, those of you in the Platinums, I look forward to seeing you there as well, where I'm going to share the Slingshot 2.0. I've done a fair bit of work on that strategy in the last little bit, and I've made it far simpler than it used to be. So I look forward to those of you who are in the Platinum section in Bali.